Okay, switching gears just a bit here as we turn our attention to investing your money. Joining us to talk about the 8 common mistakes that investors make is Brent Wilsey, the president of Wilsey Asset Management. Brent, good morning.
Good morning.
Hey, great to see you. In the interest of time, I'm going to go right down these 8 and you comment on them.
Sure.
Number 1, setting your expectations too high.
Yeah, and Jason, let me also say too that this is a kind of a strange time because everybody knows that the market's kind of high and they're starting to make crazy decisions. So this is many things that people do is want to send the expectations too high. You hear that your buddy, oh, he bought this stock, it's up 200%. Oh, I want to buy that stock. Oh, I don't want any downturn at all. You've got to realize when investing, there's going to be volatility. So understand that there will be downturns in your portfolio of 10, 15, maybe 20%. That's normal, but you've got to understand it. So don't set your expectations to be like, oh, I'm going to make a 30% return and no downside at all. So be careful setting too high.
Okay, number 2, market timing.
Yeah, and this is one that is so hard for people to do, and they say they're not doing it, but they are doing it. I'm hearing from people now, I'm getting out of the market because it's just too high. That is not the way to do it. What we do is we have target buy prices and sell price on our portfolio, and yes, some of those are triggering, so we are selling some things. Nothing to do with the market, it's just that they reached our expectation on what their true value is. So we do have cash. Now the market may go up all year long. If that happens, we will still participate because we still have about 75 or 80% invested. Don't go all in or all out. Do not try to time the market. Be smart about what you do on setting target prices on what things are worth and sell them if they hit that price.
Okay, number 3, keep emotion out of the way, buying high and selling low.
This is a hard one because, again, the emotions always come into play because they say they're not emotional, but they are. And that's the key here is that they say, well, I feel it's going to go down. I say, well, feel is an emotion. Now, if you're using logic, then you wouldn't do that. So when you feel things are going to go down, that's an emotion. Step back and don't do that.
Number 4, not understanding fees and expenses.
Yes, this is one that people don't understand. When it comes to investing, you've got to dig deep to what the fees are. When people come to our office, we explain what all the fees are and so forth. But a lot of times you go to a financial advisor or broker, they don't tell you what the fees are. Please ask that person, what are the fees? Look beneath the curtain to see what those fees are because they could really affect your performance going forward. And some programs have fees that are 2, 3, I've even seen as high as 4%. Understand what the fees are before you invest.
Number 5, focusing on taxes and not investments.
Oh, this is a big one, Jason, because a lot of people look at, oh my gosh, if I sell now, I'm going to pay all these taxes. We've done the math on this, and the taxes are not as bad as you think because when you pay taxes, you're only paying taxes on the gain. But if it drops, that 10% drop is on the full amount. We've done an analysis here based on taxes or total taxes, capital gains, taxes, state taxes, and so forth, maybe around 25%. Well, that's only the equivalent of maybe an 8 to 9% loss in the stock. So if the stock went down 15%, gosh, you're better off taking that tax hit and not risking that 15% drop in the equity or the mutual fund that you had.
Okay, number 6, chasing yield.
Yeah, this is one that people always want to get the best return. And of course we all do, but you've got to understand what you're doing. Don't chase the yield just because you see, oh, it's got a 6, 7% yield. I'm going to go into that one. You could be asking for trouble because maybe they're ready to cut that dividend. Maybe they're ready to have problems in the company. The stock could fall dramatically. The other thing people do is not just chase yield, but returns. Well, this mutual fund for the last 3 years has done, 20% per year. It must be good. It's going to do that going forward. That's a huge mistake because that is not the case. What happened in the last 3 years may not happen in the 3 years going forward. So don't base your investment decisions on past performance. Past performance, no guarantee of future results.
All right, number 7, overreacting to media stories.
Yeah, and the media does a great job of putting out what's going on, and that's the media's job, is to talk about these stories that are going on, and they could be bad stories. But you as the investor, your advisor, has to step back and say, wait a minute, is this going to have a long-term effect on my investment or a short-term effect? Maybe no effect at all. So don't just fly off the handle just because you see a bad story on the media. They're doing their job, but what you have to do is do your job as an investor and advisor and not react to that. Look at the effects it's going to have longer term.
And finally, number 8, working with the wrong advisor.
Oh yeah, this does happen a lot. And there's a lot of good advisors out there, but you got to be careful. There's some bad advisors out there as well. And some hints on a bad advisor, they're just going to try to sell your product, jump right into it. Don't talk to you at all. Don't care about what you do and so forth. They charge too much in fees. They won't tell you fees. You just get that feeling, you sit down and you feel like there's something missing. That's a bad advisor. Make sure that you feel comfortable with that person and please ask the tough questions that they may not want to answer. And if you don't answer them, that's a bad advisor.
Okay, Brent Wilsey with Wilsey Asset Management. The website for more information?
smartinvesting2000.com. Again, that's smartinvesting2000.com.
All right, Brent, thanks a lot. Have a great Sunday. Appreciate it.
All right, thank